So, well, we have had another volatile day. Um, you can kind of see I got a couple of charts here up on my screen. I got the VIX on the left side, gold on the right side. Um, the You can see the VIX has really taken off over the past several days just because of the tariff job thing. And right now, it's been pretty high. One thing that's kind of interesting. It does spike up every now and then. This is one of those spikes that we got. But if you go back to August, let's do this. Ding. Um, you can kind of see we spiked up there. That's when all the AI stuff was going on. They kind of tanked off the NASDAQ and everything like that. So they kind of spiked it up then. Um, Before that, though, it was just kind of a slow decline down. um, of course, we were coming out of the good old COVID stuff, and that's where it really, really, really jumped up. Went up to what was it, 5,000 or something like that. You can kind of see in here. We'll get there. My goodness, I should have just scrunched the chart up. There we go. But there it is. There's good old COVID. And of course, they jumped it up during old COVID, but it was way up there. Of course, it just had a nice slow return back, and now we're getting kind of volatile again. I mean, you look at what the S&P has done here. Let's just do that real quick. It's going to be kind of got the wrong contract. I've been doing that. So, but anyway, what we'll be seeing here once it chokes through that other one, we'll just go to a daily. So our biggest thing is we've had some very, very wild days. You look at yesterday, we had a 400 point range. Today we have a 300 point range. And so you look at just just over the past 14 days, we're at about 152 points in a day. Well, that's a 14-day average. All right. So once it starts knocking off the other days back there, it'll get big, big, and big, and bigger, and bigger, and bigger, and bigger. So, but to have that big of a day, we're gonna, basically see some pretty crazy moves. I mean, you look at today, we kind of rallied up through the European markets and even the Asian markets. That's where that blue bar right there. I'll get my little draw tool so you can see it better. Do, 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 do. There we go. This blue bar right here, that's where we started out at 9:30 this morning. They kind of popped up a little bit, and then they've just been coming back down. You can see we were at 53.03, and we came down to 50.79. So again, we have a 300 point range, right? So like I said, we've got some really wild days and everything like that. We've had, I mean, a lot of people are coming out and saying, it just depends on which news you read next. One says that tariffs are going to be great in the long run. Next one says we're going to recession. So I think everybody's just, throwing their little coin in the pot and just to see, which one sticks really well. And right now, only time's going to tell. So, um, but the volatility in this market right now is pretty high, and it's probably going to be this high for another week or two. We got CPI and PPI coming out this week, so who knows what all that's going to do with the markets and everything like that. But we'll just take it a day at a time and kind of see what it does. A lot of people are kind of surprised about gold, um, kind of pulling. I'm going to get rid of my chicken scratch. Oh, what happened to my? There it is. Get rid of my chicken scratch here. There we go. All right. Um, but a lot of people are trying to figure out, why gold's pulling back. No big deal, to be honest, but we hit 3,200. Every time it hits a century mark, it yanks back. Now, it's pulled back, a good 200 points here. And what's really kind of happening is people are, I don't know how to put it, robbing Peter to pay Paul. They've lost money on the equity side, so they're making, taking the money out of the side that they've made money on, and that's just kind of pulled gold down and everything like that. And I was wondering what was hitting my eyeballs over here. But it was just kind of, they've just kind of sold it off a little bit. But in the big picture, It's still above. We're playing with 3,000. So not too long ago, that was our all-time high, and now here we are, right? You can kind of see where they're kind of hitting it right back in here. This is back in February. They finally busted through it. Finally got to through 3,100, hit 3,200, and now we kind of backed up a little bit. So I think right now they're having a hard time getting back above 30.50. So they had a hard time with it before. We'll see if they do it again. But if they can get, you can kind of see where this mess is right here in this 30.50 area. So if they can get back above that 30.50 and stay there, we'll probably start moving back up again. And they were trying to get there this morning. But of course, people keep flapping their gums out there, and there it goes. So we just have, you know, some things to kind of dig through and let the market try to figure it out. With it as volatile as this is, premiums and options are really, really high. Um, so the sky falling? No, the sky's not falling. I mean, nothing solves, I mean, panic solves nothing. Everybody can freak out, but that doesn't ever solve anything. You just really got to sit back and say, what can I do to hedge something, protect something, or whatever? Or is this a good place to buy stocks? And with the volatility where it is, the VIX is really spiked up. Option premium is really pretty high. And if you're wanting to buy stock, you can go 10% out of the money. I mean, you look at this real quickly. Here's good old Apple. Everybody loves Apple. So, and they've got some pretty good support down in here in this 174, 170. In fact, we'll just put a daily chart up here. There we go. And doesn't that look nice? So, but if you're thinking Apple's going to, try to bounce back up or something, right now we're at this 176. And you're still wanting to buy shares of Apple. Now, with options, you can only control 100 shares, right? So, um, with that, if you're wanting to do that, if you just go out, I mean, just look at this real quick. Let me grab a chain. Uh, Oops, where is that? I thought I could grab a chain. Why is this not allowing me to do that? Oh, I'm on the wrong screen. No wonder. Duh. There we go. Ding. Grab some Apple here. Balloon this up. So, and this is just go out, I don't know, just go out 9 days here. Notice we're up here at 176. I mean, you can go basically to the 150s and pull in $2 off of those things. I mean, that's $25 out of the money. And even if you just want to go about 10% out of the money, the 160s ish, you can pull in $300-400. So if it drops down to 160, you get exercise. So now you're long 100 shares. Not only did you get it at basically a 10% discount, but another $300. You're looking at another 5% ish, 6%. So you really have a 16% discount on a lot of these stocks just by selling naked puts. Now, some people are not going to want to do that. They don't want to have to, dish out, all that money for, 100 shares of Apple. But still, if you're trying to do that, all the stocks that are out there, these put premiums are really, really high. And you can actually get a really nice little discount if you're trying to bottom feed some. And so I know a lot of people out there right now are, taking advantage of all this premium and just, selling all those puts and everything like that, just to see if they can acquire the stock at the lower price. And if they can't, well, they get to keep the premium anyway. So that's only a week and a half out. So that's not so bad. But you might look at that. On the other side of that, if you're worried about the downside, then I'd probably go out and start thinking of trying to find, some puts. And I mean, on the SPY, and I'd probably go out a little ways. Maybe go out to the June 20th, June 30th, whatever it may be. And you're gonna have to basically click this over to all. Scroll down. Oh man, even on the all, oh, that's on the 30th. Let's just go to July here. There we go. So you can go down. I mean, you look at the prices of these, you can actually go out and buy, 300 puts. That puts the S&P at 3,000. Um, if you want to pay more than that, fine. I don't like to pay any more than $5 for an option. But I like the ones right around the 250 area. So there's a 300 put right there. But I always, go out and grab, 4 or 5 of those. And then on half of them, or 2/3, I put a limit at 100%. So right around $5. And when you get one of those big old dip off days, you get half of it off. And now you got the other puts paid for. And if you want to, you can go out another month and use the money that you just made and buy some more puts. And I've just been rolling those things over the past several months. And I've picked up a ton of money just off of no SPY puts. And if you're a premium collector, I'd go to the other side and start selling just call spreads or something like that. But I like buying the puts just because, I mean, one day you might be getting your head handed to you, or you're down, 600-700 bucks on the puts that you have. And then all of a sudden, when you get a move like, we had today from the highs down to these lows, all of a sudden you're making money on them. And they're really there just for insurance. So I would use, these puts to kind of help you out with that. Otherwise, if you're trying to bottom feed, I go out and sell, naked puts to see if you can acquire the stock at different prices. So, but that's the one thing that you really have to kind of think about when you're looking at this, and don't just think of, just this account or that account or whatever it is. Kind of look at the whole estate value, if you will, and say, well, I got to protect it somehow. And you buy insurance on your house and your cars. Why not buy insurance on your portfolio? So if it doesn't work, it doesn't work. If it does, fantastic. So, but that's one thing that, I've done, and really up on the year, just because of all the puts I've been buying in the SPY, even though I still own stock. Some of them kind of gotten beaten up a little bit. Overall, been doing pretty good just because of the puts. So, but that's the big thing, is try to figure out some way of protecting yourself or adding to something. I think in the long haul, things are probably going to get better. But right now, things are pretty volatile. And I mean, there's no need to really worry about the market. Let the market do what it's going to do. Just protect yourself in the midst of it. So when you do get, here we go, get that S&P right. So when you do get a big move down, you've got something that's going to be paying you for it. And even today, with the move that they've had just in today's market, I mean, you've got a 300-point move in the S&P. So that's pretty substantial. And I mean, if you look at just the SPY itself, here we go, SPY. You've gone from 324 down to, 524 down to 503. It's a $25 move in just the SPY. So, I mean, granted, it's a $500, ETF, but man, just getting that much of a move those puts can really blow up. And that's the one thing that's nice about them, is the SPY options will change quite a bit, just based off those moves. But you do have to remember, if you go a month or two out, the market can change in a month or two real fast, right? So I just been kind of watching the month opens, and as long as we stay above the month and below those month opens, just keep buying puts, because until they get back above the month open, well, there it is. And we keep rallying into the end of the month, and then they just sell it right back off again. That's just been kind of what the indexes have been doing. Bonds have been selling off, which has pushed interest rates up, which is putting some downside pressure in the market just because of loans. A lot of companies use loans to kind of finance things, and now they're asking more money for loans. And so interest rates are higher. So it might be hurting them a little bit when that happens. So that's really the big thing. Another one that is kind of interesting to look at. There we go. There's good old crude oil. Um, Throw this on a daily here. Kind of looks like, the overall market, right? One thing that's interesting about crude oil, right here at this $60 area, 55, $60 in there somewhere. It's really kind of a critical area. If you were in the round table yesterday, I kind of went through this, but if you weren't, this is basically where frackers are, they either break even, make money, lose money, whichever it is. That 60 to $55 area is right there where their break even is. And if it gets below there, then, well, it's not worth it to frack anymore. As long as it stays above there, they still make money on it. So you got a lot of support down here in this, 60, $55 area just because of that. And of course, they don't want it below there. And of course, the administration does. So you got a tug of war going on right now with this, with the crude oil. Um, and I mean, if you're wanting to learn more about the energy markets, stuff like that, I mean, I actually have a service called EIT, which is the energy income trader. And actually, if you just kind of stay in here uh, in the same room for a little bit, you'll be seeing probably a replay of what I went through on, I guess it was Monday. But anyway, if you, I mean, that's the one thing. Crude right now is kind of on a break-even point. I'm expecting crude to get down to at least $45, if not $35 over the long haul here over the next 6 to 8 months. Um, and it wouldn't surprise me if we don't get down there at all, based off what they're wanting to do. The thing is you're getting a lot of resistance out of the energy companies because they don't want crude oil back down to $25. They don't make money doing that. So they want to continue to make the money that they got. And so you've got a tug of war right now between the energy folks and the administration. But they got the energy costs down, that would help a tremendous amount. And of course, natural gas is still kind of high, just because of all the winter storms and everything like that going through. Plus, there's a high demand on natural gas in two areas. One is they need more natural gas plants. In fact, I think Trump's signing or signed an executive order, making it easier for coal mining, and because they want to get the coal plants back up and running again. And so they need to make more power because of all the supercomputers and stuff like that. Another thing is we're exporting a ton of natural gas. And of course, right now we're shipping it over to Europe, and which is it's a cool thing for us. We get to sell our natural gas, and they get natural gas. They don't have to use that Nord Stream pipeline over there. Which the thing about rebuilding it and getting it going again. But anyway, so we are exporting a lot and using a lot. So natural gas is going to stay a little bit higher just because of that demand. Then natural gas has really 2 times a year. Um, it has demand. One just winter, just because of cold weather, people use it to keep warm. But another one is energy, and we do use a lot of energy throughout the winter. But the summertime, we use energy two ways. One for keeping things cool, air conditioning and stuff like that, and for powering stuff. So that's the thing about it. Can I talk about trading options that have huge buy sell trades like here? Geof asked me to email you. Um, that have huge buy sell trades. I don't know what huge means. 12 cents isn't huge. They're $1 wide spreads. So that's what I usually do in 12X and EIT. But yeah, send me an email and I'll see if I can help you out with that. Put it in as one order. if that's what you're asking, do a spread itself and just put the price in at the midpoint is the easiest way of doing it. It'll get filled. I mean, if you're trying to get into the EIT trade from earlier today, you're probably not going to get a whole lot for it now, just because crude oil sold off quite a bit since we got into it. Crude oil was above 61 bucks when we got in. Now it's down at 59, so you're not going to get that much for it. Did I hear about the new lithium mines in Arizona, Nevada, new gold mines? Uh, I've heard that our uranium production is really at all-time highs right now, but not the lithium side of it. So I'll look into that. Do we think we've hit the bottom when it comes to tariff impacts, or should we be expecting more downturn? I actually think that we really um I don't know if we've hit bottom yet. I'll say it that way. Um, One thing that I'd like to say that we have hit bottom, and think about this real quickly. Here's the old S&P chart. All righty. Um, One thing we have to think about, today's the 8th of April. Ta-da! We're not even a week old, right? Um, Tomorrow is 1 week from, where we started on the 1st. So we opened up last Tuesday for the month. Tomorrow is Tuesday, or today's Tuesday, isn't it? Oh, duh. Okay, we are 1 week. So we've been 1 week into this month. Man, my brain's all over the place. We opened up the month well, let me put the S&P in here, /ES 125. Ding. We opened up the month at 5644. We're down here at 5100. Okay. So we are 544 points from the month open in basically 5 trading days. There it is. So until we can at least get back above that, I'm really not seeing a huge rally in this market. Now, granted, that was 5644. That's a long ways from here. They had a nice little rally up and then they kind of sold things off, right? So, but this is a daily chart that you see on here right now. But we've got these lower lows, lower highs. And even though right now with that little bar on a daily chart, we actually got a higher high, higher low. Um, that didn't last very long. Basically, just went up and challenged yesterday's highs and said, well, we tried and it didn't work out too well. Until they get back at least above the month open, which is only, like I said, 7 days or 5 trading days old, then I'm not too worried about the upside right now. So now we're not making new lows. So right now, are they trying to decide, do we go back down to 48.30 on the S&P, or are they going to try to get back up to that month open? Now, if they don't, fine. But they're going to have to at least try to get above, the 55.50 area, which is basically where these little lows are and this little high is over here, is right around that 55.50. If they do that, then I might go, hey, they might try to go back up to that month open after all, and then off we go. And looking at, what the market's done, I mean, if you just look at our, 400 point, 300 point, 400 point range days, it wouldn't take them a couple of days to get there, right? So, until the volatility really calms down, they can get someplace real fast. But right now, I'm not too, overly confident that we're changing direction and moving back up. Now, if they don't take out that low over the next week or two, especially with the CPI and PPI coming out and all this stuff going on, if they hold above that low, then the longer they hold that low, the more confident I'm going to be going, saying, hey, that's probably going to be the low, and we're probably going to be heading up from here. Now, it might be a slow grind up, but that's the thing. If they go down there and peck out that low again, okay, so now they got another low, and we got to see how long it lasts. But the longer they can't break below something, the more people are going to say, hey, we had made a new low, we're probably going to go higher. And you'll really see that if we get back above that 56.44. I remember we were up there at 6,200, so 5,600 to 6,200. Well, there's another 600 points. So I mean, all looks kind of crazy, but from 5,100, 500 to 5,600, and then you got 600 up to the highs. So, and what's kind of crazy about that is Europe. You look over at the DAX literally was making a new all-time high last week and a half ago. And of course, the S&P wasn't. But that's the thing. Europe has been a lot stronger throughout this year than we have, just because, well, we've had elections and now we got all this tariff stuff going on. And it all depends on, what you listen to or what you read. Is this is a great thing, this is a bad thing, this is a great thing, this is a bad thing. And so I think everybody's just kind of flipping a coin right now. And I don't like them flipping coins with my money. So there it is. But let's see. Considering how fast the high end markets jumped on tariff. Yeah, I mean it can change very, very quickly, especially with the ranges that we have now. So I'm like I said, I'm not too worried about the upside yet. We start getting above the month open, then we got a positive month. February was down. I think everybody knows that. But not February, March was down for the most part. Now we're coming into April, and the thing is can they get it going once again? And I mean, here's your March and April and all that good stuff. Or here's February was down. April chewed around a little bit, but still ended up down. And now we get to see how we do April here. And right now it's on the downside. Of course, everybody was so surprised about the tariffs. So, but there it is. Oh, wow. We've already gone 30 minutes. Time flies when you're just talking, right? Yeah, if you have any other questions, let me know. Otherwise, we will wrap things up. We'll be back on Thursday at our normal time, and which is the day before all of the bank earnings start coming out. So all of a sudden, earnings season begins. There's kind of a lull a lot of times between when the banks come out and then when the flood of earnings start moving. Usually have some all, throughout the next week, some earnings start moving and everything like that. You'll get like Netflix and everything. And then the next week, it's like the whole S&P 500 just comes out and just wallops, and everybody tries to chew through that. So, but anyway, yeah, if you want to hang out and go through the energy income trader, they'll be playing that in this room here pretty quick. And we will see you all on Thursday.